First quarter results for SAP didn't quite live up to expectations today as profits suffered from last year's acquisition of Sybase. For more on the outlook at the world's biggest maker of business management software, we are joined now by co-CEO Bill McDermott. Bill, thanks for stopping in and chatting with us today. A disappointing release for SAP. The markets didn't take it very well. What are the problems and what are they not seeing that you're seeing?
That's a good question.
I know you're still going to be optimistic.
Well, I am, but I have good reason to be, Matt. We actually outran all the analyst estimates in Q4, biggest Q4 in the history of the company. And this quarter, we grew the top line 26% year over year. That's within the estimate range and certainly within the guidelines of our guidance. And on the profit side, there's a few little subtleties that I think are getting better understood as the day goes on. One is acquisition-related costs, and two is stock-based employee compensation, which are now treated as non-IFRS items. If you exclude those, we were 26% year-on-year up in profit, and that's what we guided to. So that's the guidance model that we had. Now, I think
my eyes are kind of glazing over here.
Well, maybe the fact that the analysts missed the estimate so bad and we overachieved it so much in the fourth quarter made them a little optimistic in Q1. But we did state the guidance exactly as I have stated it to you.
What about the sales growth? I mean, I'm not sure about your relationship with Larry Ellison. Surely it's not as competitive as Hasso-Plattner was, but they are growing at a faster pace, and they still are obviously your number one, your only real competitor, right? So how do you see that relationship, that competition playing out?
Well, in the business software space, we continue to win against the competition 8 out of 10 times. They may have a quarter here or there where the growth percentage could be higher, but when you extract the acquisition scenario and you look at organic growth, I think we've not only held our own, but we've gained share against our leading competitors and also the smaller ones. The fact is, Oracle's got a strategy to consolidate the past through acquisitions. There's nothing wrong with that. That's a strategy. Ours is to innovate the future, and actually we believe that innovation is the real issue for companies to grow. So, for example, not only do we have the end-to-end market-leading platform, but we see business analytics as a major source of growth. Companies need real-time insight as to what's going on. We also think we have to disrupt.
We feel the same way.
Of course.
Here at Bloomberg.
Of course. You want to know what's going on. So having real-time insight, sensing and responding what your consumers are doing, and aligning the entire supply chain all the way through to the customer relationship manager is essential to win in today's environment, which brings me to mobile business.
I was just going to bring that up myself. Obviously, it's a huge key. I know you feel that way as well. Oracle, obviously, you mentioned growing through acquisitions. SAP has done most of its growth organically, but you made a huge acquisition in Sybase last year, at least by SAP standards. How is that going?
It's fantastic, and that's the whole point. Mobile business is exploding. If you look at all the PC manufacturers this quarter, they all lost share and they all lost revenue in terms of PC sales. And that's because tablets are going through the roof. And the idea of the mobile professional, provisioning applications to the device, securely managing these devices across corporations all over the world is what we do as the market leader in the unwired platform. And that's why we see mobile business, real-time computing, and this end-to-end process platform in multiple industries and market segments as the leading source of innovation to help companies grow. And that's where we're different than the alternative.
I have to ask you about acquisitions. I mean, it seems to me that this tablet world is one where you increasingly have to work with other people. Do you have to buy other companies as well? Are you going to make any big acquisitions?
No, our feeling on this is we should remain device agnostic. So there are many companies out there that will make devices. Many of them will be very good, and customers will have choice, and they'll choose lots of different devices. What we want to do is manage the infrastructure by which the applications and the workflow and the business process interacts with the device. We also know that all these devices and companies will be managing personal and company data, and that has to be secured so companies run securely and effectively. And we will do that for companies. We'll work with all the logical partners in this space as we always have.
No big acquisitions planned?
Not at this time, Matt, but if we do one, you know anything we do is about innovation, it's about growth, and it's about moving SAP and the customer and the shareholder forward. It will not be about consolidating past technologies to cut cost and leverage margins.
All right. Hey, Bill, thanks so much. Really appreciate you coming in the studio today. Bill McDermott, co-CEO of SAP.